Hello guys, and welcome to my YouTube channel once again. So in today's video, we want to look at VIX 50 index, volatility 50 index, and we are on the daily time frame. All right, so you can see that the market had been started selling impulsively. For those of you who understand my reversal strategy, you can see that we had an impulsive movement from here when the market sold nicely. Then it started creating these lower highs and lower lows. Started creating the lower highs and the lower lows till it got to this level right here. Then now, as you can see, after the market got to this, created this lower high, this lower low, created a high that was somehow a bit higher than the previous lower high. You know, something that would actually look like a change of character. Then it still sold and went below the previous low. So you can see now the market bought back to this zone. So you can see now, what we have noticed on this particular zone is that the market is always trying to buy above this zone, but it's finding it difficult to actually buy above this zone. You understand? All right, so what do we do? All right, now for those of my students who understand the engulfing candlestick strategy, you can see that this is actually a high probability trade setup. When you find this, something like this right here, massive sales. Now like this one here, we found, you see, there was yesterday's candlestick closed bullish and it engulfed the bearish candlestick, and this is massive sell currently today. And one of my students, which I finished a class today, made a whole lot of profit just from this particular single trade. All right, so now we are not looking at that. What I want you guys to see is that the market is finding it difficult to buy above this zone, and whenever the market is able to successfully buy and close above this zone, I do not mean the market buys and closes above this zone. I do not mean the market to buy, go above this zone, then drops a week, then comes back to close under within the range. We don't mean that. We mean the fact the market buys and closes above this zone. After it closes above this zone, then you know, okay, the market is actually ready to buy. All right, that's when you will know the market is ready to buy or to continue buying. But as long as the market is closing below this zone, regardless of the size of the wick we have up here, understand that the market is not ready to buy. You understand? The market is most likely not going to buy. All right, so that's why we are having these sales right here. But considering what we have here, we can easily let's go to the lower time frame. Let's go to the lower time frame, and meanwhile, let's look at this. If the market is able to break above this zone, target this particular level here, and it's going to be massive profit. You know, this is actually a pair that is a bit volatile. This pair is a bit volatile, and you know, if you get a good entry, let's say you get an entry here, you are lucky enough to get an entry there. With the minimum lot size, you can make up to $50 or $40 in profit with just one position, and you have a good account size. This is so much profit. All right, I mean, when the breakout happens and the market closes above. All right, so now let's go to a lower time frame. Let's go to the 4-hourly time frame, because I want to show you guys something quickly. All right, so on the 4-hourly time frame, we have this. You can see the movement of the market after creating this low, this lower high. The lower high, the market bought, then went above this lower high. Then the market came back to retest this level. Let me mark it immediately. Excuse me, this is not what I wanted. Let me get the horizon, the rectangle tool to mark this zone. All right, you can see clearly that this is actually a zone the market had been selling from previously. Market bought from here and also sold from here. We have so many buys here at this point. So the market, when the market was able to break and close above this zone, that is when the market continued buying. Then it pulled back to retest this zone at this point, and then continued buying up to this level now. All right, so now we started having higher highs and higher lows until the market got to this zone. Then as it is, we can easily put a trend line. Just put a trend line to, you know, guide this movement. Let's put a trend line just like this, something like this, to guide this movement, guys. Okay, we guide this movement, and then can also put another one to mark out the resistance zone. All right, you can put another one, something like this, to mark out the resistance zone, something like this. There's nothing wrong with this. Besides, we are not even really concerned about this. This is where we are looking at for, because the structures like this most likely breaks to the downside. All right, so we put our interest more on what we have right here. All right, so now, as you can see, the market is at a zone Meanwhile, before I continue, I'll be having a free class with all my fans, my subscribers, my students. There's going to be a free class this Sunday. There's going to be a free class this Sunday. I think that should be the 20. I'm not sure what that is, but know that this Sunday, we're having a free class. All right. So once, if you have not yet joined my Telegram channel, there's a link in the description of this video. Click on that link, get to the Telegram channel. That is where I post information about the class. That's where I update you guys about when the class will start, what time the class will start. So get to the Telegram channel. And also, if you want to enroll in my private mentorship, then that is where you'll find my direct contact to reach out to me so that we negotiate your mentorship. All right. Then, and also, before the end of this class, I will mention about the May mentorship badge. All right. So meanwhile, just look at this pair. Like I said, the market pulled back from here, retested this level, and it continued buying. It bought up to this level. All right. So now, what we have here, the market created a demand zone around here. Now, if you look at this, let's pull out a Fibonacci retracement tool. With this Fibonacci retracement tool, you can see that the market, where the market is, this bullish candlestick is forming, is actually where we have the 61.8 and the 50% mark on the Fibonacci retracement tool, which is in alignment with the confirmation that the market is actually trying to buy from this level, this particular demand area where it bought from previously. You understand? This is where it bought from previously, so it's in line with that. So we are expecting the market to buy. Perhaps it is going to buy back to this zone. Then on getting to this zone, it creates a double top, then sells to the downside. So, but for now, the market is buying. It is very simple, guys, to see. And if you are able to spot this kind of things on time, this little move alone on the 4 hourly time frame, if you go down to the 15 minutes time frame, let me check the 1 hourly time frame first. Let's see the 1 hourly time frame first, what we have there. 1 hourly time frame, please be patient, it's loading. Okay, you can see, so it looks like a kind of, a double bottom here on the 1 hourly time frame. That's what it looks like, kind of a double bottom, like the market created the first bottom right here and then also created the second bottom right here. That's what it looks like, a double bottom. And for that reason, we will expect the market to do what? To buy up to this level and break, because this looks like a resistance area. The market has been selling from here. You can see the rejections. So on this time frame, there's a little rejection here. If the market can break above this rejection zone, then we'll be seeing more buys. We'll be seeing more buys to the upside. So this is acting like a kind of a neckline here, because we are looking at this as a double bottom based on the level we are seeing it. So we are expecting some buys on this pair, maybe to this level before the market starts selling. All right, so let's look at it on the 15 minutes time frame. Let's see the 15 minutes time frame. Let's see what we have done on the 15 minutes time frame. It's loading. All right, so you can see the market is approaching this, look very clearly like a neckline. So once it's able to break above this zone, we'll be seeing more buys. We'll see more buys, and the market will be approaching, will be buying towards this particular level here, the zone we marked on the daily time frame. And from here, we'll be expecting some massive sales. We'll be expecting, where is this, the zone we marked on the daily time frame? Okay, yes, it's the daily time frame zone. From here, we'll be looking out to see the market form structures that indicate it's actually going to reverse. Because if the market reverses from here, like I said earlier, it means it's going to be forming a double top. And as a double top, is a reversal pattern, a strong reversal pattern, meaning the market might be selling massively to the downside, especially based on the structure we have here. As you can see, the market was selling nicely until it started creating this impulsive correction here on the 4 hourly time frame. Then it started buying again. This kind of buys is not too smooth, it's not too smooth. So you can easily expect the market to buy to this zone, then sell nicely to the downside, guys. You can sell nicely to the downside. But this little move alone on this pair, if you are someone who can enter the market aggressively, you will make some nice profit. If you check on the 15 minutes time frame, where the market started buying, if you bring the limit to try to see, let's say you entered the market here. For those who understand the engulfing candlestick strategy, let's say you entered the trade somewhere here, then you're able to hold the trade up to this level. It's about $5 already with the minimum lot size. you make some little profit, but since you did not get in on time, you have to wait for the market to break above this zone, then do a little retest, then you go in. Or if it closes if it closes above the zone nicely, you can just enter it. But do not lose sight of the fact that the market will most likely react to this level here if it starts buying. So do not panic if you are in a hurry to enter the trade immediately on the close of this pair above this zone. So you have to bear in mind that it's going to reverse, or it is even best to wait. The market hits this zone, comes back to do a retest, then you take your buys and allow the market to run in profit. All right, you make your profit and you stay part of the chart, guys. It is very simple, guys. It's very simple. All right, so do well to subscribe to this channel if you've not done that yet, and also share this channel to this video to your friends and families, people that are interested in some quality videos like this, information that will help them in their trading journey. All right, then share your thoughts in the comment section. Like this video, guys. When you like it, the YouTube algorithm shares it to so many people, so that we increase in numbers. We want to see us increase in numbers. Do not forget to join the Telegram channel. The main mentorship batch will be coming. The registration has started already. All right, so the information will be posted on the group, so that every other person's will join. Those who have already taken action, they contacted me privately, but I'll drop the information on the Telegram channel, so that everyone who is interested can hop in. All right, meanwhile, do not forget the class on Sunday.